Are we witnessing a significant shift in the financial landscape?
Today, we unlock insights from top analysts like Jeff Snider, discussing how the un-inversion of yield curves may indicate economic changes.
Plus, we have Allan Lichtman providing intriguing predictions for the upcoming presidential election, essential for understanding market sentiment.
And best of all, we streamline these insights so you can stay informed in just minutes.
Join us as we explore the factors influencing today's stock market and economic climate.
Next up, hear directly from Eurodollar University about the implications of these economic trends.
Let's dive right in. Yield curves around the world are un-inverting, and this trend is causing quite the commotion in the financial waters.
Here's the full report. This isn't just a U.S. phenomenon, it's a global indicator of worsening economic conditions. Jeff Snider points out significant implications.
What's the thesis behind this yield curve un-inversion?
The core thesis indicates that as more yield curves un-invert, it signals that central banks will likely lower interest rates due to deteriorating economic conditions globally. This is seen as a prelude to potential recessions.
Let's break down those key points, starting with global signals.
Exactly. With the Bank of Japan hesitating to raise rates even when their economy suggests otherwise, it demonstrates their reliance on the U.S. economic outlook.
And those central bank reactions, what's the scoop there?
Global central banks are not just watching, they're reacting. Many are speeding up rate cuts as they align with the signals from yield curves indicating potential recessions.
Interesting connections. What do the yield curves tell us about recession risks?
The evidence is compelling. Historically, when yield curves have inverted, it precedes recessions. Now, with synchronization across global curves, recession risks are elevated.
What are the predictions emerging from these trends?
Central banks are likely to accelerate rate cuts, realizing that collective action may be necessary to deal with the growing uncertainties in economic conditions.
And what about overall economic health?
The prediction points to a synchronized global economic slowdown. As uncertainty grows, consumer demand is poised to fall, affecting inflation and growth.
In summary, what are the main takeaways from this discussion?
The findings emphasize a pressing need for coordinated economic strategies globally, as these yield curve signals can't be ignored. They remind us that economic interdependence is more than just a buzzword. It's crucial.
But wait, there's more. Coming up next, we'll explore insights from Tom on the world's largest short squeeze just started again.
Absolutely one not to miss. What's Tom going to uncover about the current market dynamics? Stick around.
Let's dive right in. The hot topic from FX Evolution today is the market overbought, or is there still potential for gains? Tom's insights might just blow your mind.
Absolutely. Tom breaks down complex market indicators, and I can't wait to share what he discovered about the bullish percent index and its implications for investors right now.
What's the core thesis behind Tom's analysis today?
Tom argues that the bullish percent index has just crossed the 75 mark for the first time this year, signaling caution as it hints at potential overvaluation in certain sectors.
Let's talk about the Chinese market. What's happening there?
Well, Tom highlights that aggressive state stimulation alongside structural changes is turning heads in Chinese stocks, which could lead to a protracted rally.
Interesting perspective. What about trends with the S&P 500?
Indeed, Tom notes that similar percentage recoveries from past tech booms indicate we should tread carefully. Small caps are trailing, showcasing clear market segments under pressure.
And don't forget about volatility. What's Tom predicting for October?
Tom warns that history shows October can unleash significant volatility spikes. With critical data releases on the horizon, traders should prepare for potential roller coaster days.
Looking ahead, what does Tom foresee?
According to Tom, a potential market correction may play out if the recent rally doesn't hold. Signs point to expected consolidation phases post-squeeze that investors should watch closely.
And what about sector rotations? What's in store?
Tom hints at substantial sector rotations unfolding, particularly as investors reposition toward markets with favorable outlooks amid broader economic pressures.
So let's wrap up these key takeaways. What should investors be mindful of?
Tom emphasizes the need for caution in overbought markets, while also identifying strategic buying opportunities in sectors showing promise for future gains.
But wait, there's more. Up next, we'll dive into insights from Allan Lichtman on Prophet of Election Predictions reveals who next president will be. Allan Lichtman.
You won't want to miss the deep dive into Allan's bold predictions and historical insights.
Our next insightful summary dives deep into the mind of Allan Lichtman, renowned for predicting presidential elections flawlessly for 4 decades. He's back with his final forecasts. Will it be Harris or Trump? Let's navigate these currents.
Absolutely. Lichtman's analysis revolves around his famous 13 keys to the White House, a unique framework that tracks election outcomes. Stick around, it's about to get interesting.
So, what's Lichtman's core thesis? What makes him so confident?
He believes that amidst evolving political landscapes and critical events, Harris's candidacy aligns favorably with his keys, leading to a predicted victory.
Let's break down this unique forecasting tool. What are these 13 keys Lichtman uses?
They assess factors like incumbency, charisma, and significant events, creating an algorithm for predicting election results. Each key has substantial weight.
Incumbency is always a hot topic. How does it play into Lichtman's predictions?
It's typically a big advantage, but Biden's exit from the race means the key shifts. It could alter the election's dynamics significantly.
Let's chat about charisma. Why is it important?
It's vital. A candidate needs to inspire across the board to secure that swing vote. While Harris's approval is decent, she's not yet a transformational figure.
What's Lichtman's take on social unrest and scandals? Are they critical?
He argues that while important, they need to be substantial. It's not the noise in the media that counts, but genuine crises affecting public perception.
In terms of representation, what does Lichtman signify with Harris?
Her candidacy represents a significant change, indicating a more diverse electorate. It's an emblem of shifting priorities and acceptance in society.
Crystal ball time. What does Lichtman predict for Harris?
He forecasts a strong chance of her victory based on several favorable keys, signaling a monumental moment for diversity in politics.
What upcoming events could shake things up for current predictions?
Absolutely. Any economic changes or significant social movements could reshape the political landscape entirely, keeping everyone on their toes.
So, what are the concluding thoughts on Lichtman's predictions?
The 2024 election appears set to be a landmark event. Harris's potential win could instigate sweeping changes in representation, a real game changer for democracy.
But wait, there's more. Up next, we'll explore market predictions that could impact your investment strategies.
You won't want to miss this session. The insights are juicy.
All right, let's dive right into the whirlwind of the stock market today. What's the buzz surrounding the final rally that everyone's debating?
Here's the full report. The stock market is breaking records again, leaving short sellers scrambling. What's fascinating is how many investors panic sold right before this upswing.
So what's the core idea we're unpacking here?
The thesis is remarkable. As oil prices drop amid ongoing economic fears, U.S. stocks are rallying, suggesting that investors are ignoring recession warnings. It's a classic case of market optimism versus underlying data.
Let's break down this phenomenon. What's going on with investor behavior?
Incredible. Investors pulled a whopping $3.46 billion from equity funds just as stocks were gearing up to soar. Talk about bad timing.
What's the significance of the falling oil prices here?
Typically, falling oil prices indicate a weakening economy, yet today they're boosting stock investment instead. Kind of a twist, right?
And what about junk bonds? What do those numbers tell us?
Great observation. Junk bonds are making new highs since July, which isn't what you'd expect during economic turmoil, just a sign of underlying market strength.
Interesting. So what's pushing these market valuations higher?
It's all about falling interest rates. Each time rates drop, stock valuations seem to leap up. A classic bullish cycle.
So what's needed for a potential recession?
We need a shock, a housing bubble bursting, or a dramatic market downturn. Without it, the market may keep climbing.
What's the crystal ball saying for the stock market ahead?
Predictions are bullish. Unless an economic shock appears, this rally could prolong, creating opportunities for savvy investors.
What warning signs should investors watch for?
Caution is key. If indicators show more cracks, the market could shift fast. Staying informed is essential.
In summary, what's the crux of this discussion?
It's all about investor sentiment driving this rally forward. We're seeing complex signals, but the outlook remains optimistic for now.
But hold on. Up next, we're diving into some intriguing insights. Leading indicators say no recession over next few quarters. Lakshman, Achuthan.
You won't want to miss Lakshman Achuthan's take on the future market outlook and whether we should believe those indicators.
Let's navigate through the insights shared by Lakshman Achuthan on the current economic landscape. Are we really safe from recession?
Lakshman provides a deep dive into economic cycles, arguing about the resilience in the economy amidst thin consensus on forecasts.
What's the core thesis presented by Achuthan regarding the economy?
The main takeaway is that while the economy is decelerating, there isn't an imminent threat of recession. Achuthan emphasizes resilience, even against a backdrop of market fears.
Let's break down the key points. What's happening globally?
Achuthan notes a global economic deceleration yet highlights resilience in certain regions. The varied performance is crucial for investors.
Now, tell us about inflation.
The pace of inflation has been decelerating, but indicators suggest it might firm up again. It's a cycle worth watching closely.
What should investors consider right now?
Achuthan emphasizes the importance of being aware of market cycles and positioning accordingly for potential investment gains.
What predictions does Achuthan make about the economy moving forward?
He suggests tracking key indicators for signs of recovery, especially in growth sectors, while keeping a close eye on inflation movements.
Finally, what does Achuthan conclude about the current economic environment?
It's clear that staying informed and adaptable is key. Economic cycles are ever-changing and investor strategies must evolve accordingly.
If these insights resonate with you, consider subscribing for more valuable content like this.
Your support helps us continue delivering interesting and helpful financial insights. Like and subscribe.
What a fascinating discussion we've had today. We learned from experts like Jeff Snider about the importance of monitoring yield curve shifts.
Absolutely. And Allan Lichtman reminded us that the outcomes of upcoming presidential elections can profoundly shape market sentiment.
Lakshman Achuthan and Game of Trades both indicated the fluctuations we might expect in the near future.
That's right. If anything, today highlights the complexity of the financial landscape we're navigating.
So, to our viewers, remember that staying informed is key. If you found this content insightful, give us a thumbs up and subscribe for more updates.
Join us next time as we unpack more ideas to keep your investment strategies sharp. Don't miss out. Check out the rest of our videos.
Thanks for tuning in, and we'll see you next time on Financial Insights in Minutes.